Welcome to today's What Moved the Market show. I'm your host Prem. It's Friday, October 10th, 2025, and here is everything you need to know as the markets close for today. Let's begin with the day's market performance. Indian equities closed on a high note. The Sensex climbed 329 points, closing at 82,501, while the Nifty gained 104 points to finish at 25,285. Bank Nifty strengthened as well, supported by gains across most sectors. The overall sentiment was distinctly bullish. This was the indices' best weekly run in over 3 months, powered by optimism around improving India-UK trade prospects, hope for a positive India-US trade deal, easing tensions in the Middle East, and robust festive season demand on the domestic front. Strong passing domestic economic indicators and recent actions from RBI also contributed to steady optimism. On the currency front, the rupee maintained stability against the US dollar. There were no record highs or lows during the session, and no extraordinary impact on market mood was observed from INR-USD moves today. Moving on to the day's top gainers and losers. Among the most impressive performers, SBI and Maruti both rallied more than 2%, benefiting from healthy financial results and sector momentum. Axis Bank, Adani Ports, Eternal and Power Grid were also in the spotlight for strong advances. On the other side, Tata Steel slipped 1.5%, largely on weaker global commodity cues and profit booking. TCS declined by 1%, missing its Q2 profit targets amid a volatile post-result session. Textile stocks stole the show among smaller names, leaping as high as 17% in places, with traders anticipating export windfalls from ongoing India-UK trade talks. Let's review the key support and resistance zones. The Nifty broke out of its recent consolidation and comfortably held above the crucial moving averages, ending the day well above the 25,150 support level. Momentum indicators suggest potential for the index to retest resistance near 25,500 to 25,550 in the coming sessions. Bank Nifty similarly held above major support, with technicals pointing to continued strength, barring any unexpected reversals. Sector performance today was resoundingly positive. All segments closed in the green except for IT and metals. Nifty IT slipped marginally by 0.05% as TCS's results weighed on sentiment, and metal eased down 0.91%, primarily led by Tata Steel slide. Leading the pack, Realty and PSU Banks surged 1.67% each, driven by strong sectoral earnings and anticipation of further policy support for infrastructure and banking. Commodities also had an eventful session. Global crude oil prices stayed range-bound as Middle East tensions eased. MCX Gold experienced a minor pullback of 0.8% down after a strong long run. Silver corrected up to 1.5%. Base metals tracked weak global cues, mirroring sentiment seen in the equities space. Geopolitical events continued to influence sentiment as hopes for an India-US trade deal climbed, following positive signals from Washington. Middle East tensions remained in focus, but saw tentative easing, lending relief to global risk markets and supporting Indian equities. UK trade optimism saw textile stocks rally sharply, while exporters eyed new opportunities in the months ahead. Looking ahead to next week's technical outlook. For Nifty, the index has now established solid momentum above consolidation and moving averages, with 25,150 holding as a key support. Upside targets lie in the range of 25,500 to 25,550, unless unexpected volatility emerges. For Bank Nifty, watch for continued follow-through above major support, with sector leadership and quarterly result trends offering further direction. Here's one actionable takeaway before signing off. Stay nimble and use trailing stops as Nifty approaches its resistance zone near 25,500. Momentum remains on the bullish side, but with significant events and festive season flows ahead, flexibility will be key for capturing further gains or guarding capital. That's all for today's edition of What Moved the Market. Stay tuned for next Monday morning's wrap and send in your questions and comments to join the conversation.